Korean Economic News Briefing, April 17, 2026. Good morning. Here is today's Korean Economic News Briefing. We begin with significant developments from Washington, where Deputy Prime Minister and Finance Minister Gu Yoon-chol is attending the G20 Finance Ministers and IMF World Bank spring meetings. The Deputy Prime Minister has announced several major policy initiatives that will reshape Korea's economic strategy going forward. First, on the international stage, Deputy PM Gu has unveiled an ambitious plan to position Korea as a global artificial intelligence hub. According to his statements in Washington, 6 United Nations agencies, along with the Inter-American Development Bank and the Asian Development Bank, have agreed to establish AI hubs in Korea. This initiative could eventually lead to establishing a UN AI headquarters in the country, marking a significant achievement in Korea's bid for international economic influence. However, the Deputy PM clarified that while global large language model technology shows limited promise, the government will focus its support on smaller language models, or SLMs, positioning this as a more viable strategic direction for Korean AI development. In domestic policy news, the government announced the establishment of the Korea-US Strategic Investment Corporation, which will be headquartered in Sejong City beginning June 18. This marks an important shift in public asset management policy following previous controversies over undervalued asset sales. The corporation will serve as a control tower for U.S. investment in Korea while also promoting balanced regional development by locating its headquarters outside the Seoul metropolitan area. The Deputy Prime Minister also confirmed that he will hold bilateral talks with U.S. Treasury Secretary Scott Bessent tomorrow. These discussions are expected to address multiple economic issues including exchange rates, investment flows, and Korea's growth outlook. Notably, PM Gu expressed confidence that Korea can achieve economic growth exceeding 2.0% this year, while cautioning that exchange rate volatility and Middle East risks remain factors to monitor before the currency stabilizes. Turning to the broader global economic picture, China's first quarter GDP growth came in at 5.0%, exceeding market expectations. However, there are underlying concerns. The urban unemployment rate rose to 5.4% in March, marking a one-year high contrary to predictions. Fixed asset investment growth slowed to 1.7% from 1.8% in the previous period, and real estate investment declined by 11.2%. These numbers suggest that beneath the surface growth figures, structural challenges persist in China's economy. On the U.S. side, monetary policy uncertainty continues to dominate discussions. The Federal Reserve held its key policy rate steady at 3.50 to 3.75% at its March meeting. However, Treasury Secretary Scott Bessent has publicly disagreed with the Fed's inflation assessment, arguing that core inflation excluding energy and food prices is actually declining. This divergence between the Treasury and the Federal Reserve on inflation dynamics creates uncertainty for markets and policymakers alike. Domestically, Korea's job market showed resilience in March, with 206,000 new jobs created, continuing a trend of gains exceeding 200,000 for the second consecutive month. The unemployment rate improved to 3.0%. However, the government acknowledged that the Middle East conflict is creating broader economic pressures. Inflation concerns and reduced consumer sentiment from Middle East tensions present downside risks to economic growth, according to the Ministry of Economy and Finance. Looking at financial markets, the Kospi closed slightly lower at 6,190 points on profit-taking amid elevated oil price concerns. SK Hynix shares declined 2%. Meanwhile, the KOSDAQ index moved up 7.07 points to close at 1,170.04. The Korean won weakened to 1,483 won and 50 jeon per dollar, up 8 won and 90 jeon from the previous session. This exchange rate movement reflects continued pressure from global economic uncertainty. On the corporate front, there is a notable contrast between Korea's technology leaders. Samsung Electronics continues to benefit from semiconductor boom conditions with record-breaking quarterly revenues, while LG Electronics faces challenges across its core businesses. LG's first quarter results showed revenue of approximately 23.73 trillion won and operating profit of 1.67 trillion won, representing growth from the previous year. Notably, this marks a return to profitability after the fourth quarter of last year. However, LG faces ongoing headwinds from weak consumer demand driven by high inflation and elevated interest rates, as well as intensifying competition from Chinese manufacturers offering cheaper alternatives. The government is actively supporting advanced technology sectors. Industry Minister Kim Young-kwon visited the central region to inspect battery and display industry competitiveness, launching efforts to expand manufacturing AI transformation, known as MX, centered around industrial complexes. Samsung SDI, LG Energy Solution, and SK On participated in discussions about strengthening their competitive positions amid global market challenges. The government is also pursuing a transformative K-Moonshot project to leverage AI for solving critical national science and technology challenges. This represents a fundamental shift in research and development methodology toward AI-centric approaches, aiming to double research productivity while strengthening competitiveness in advanced industries. In the real estate sector, Seoul's Myeong-mak Station area will see 2,195 new apartment units developed, including 569 long-term Jaeons units for vulnerable populations. This project reflects the government's continued focus on transit-oriented development. Notably, apartment competition rates are increasingly polarizing around transit hubs, where better mobility and living infrastructure provide competitive advantages. This trend is expected to continue as market uncertainty leads consumers to prioritize location convenience and infrastructure quality. Japan announced increased defense spending of approximately 98 trillion won, representing 1.5% of GDP. This spending increase reflects broader geopolitical tensions and Japan's reassessment of regional security needs. Finally, regarding international geopolitical developments affecting markets, Israel and Lebanon have agreed to a 10-day ceasefire, temporarily suspending hostilities between Israel and the Iranian-aligned Hezbollah militia. Prime Minister Netanyahu indicated this creates a historic opportunity for peace agreements. However, negotiations between the U.S. and Iran over nuclear issues remain contentious, with fundamental disagreements persisting over uranium processing and nuclear development restrictions. The possibility of a temporary agreement followed by 60 days of additional negotiations is being discussed. For investors and general viewers, today's developments suggest several key takeaways. First, Korea's strategic positioning as an international AI hub and investment hub offers long-term growth opportunities. Second, continued vigilance about global uncertainties, particularly Middle East tensions and exchange rate volatility, remains essential. Third, market divergences between tech leaders like Samsung and LG suggest the importance of selective stock picking. Finally, the apparent resilience of Korea's labor market, combined with ongoing growth prospects above 2.0%, provides some confidence for the year ahead, though external risks require careful monitoring. This has been your Korean Economic News Briefing.